Major US indexes have been declining for the second day in a row. Experts assure that this is a sign of the start of a correction. A 0.2% drop in the stock futures at the opening of the New York session also indicates an overall decline in the equity market. Besides, there have been no fundamental factors for a downward movement. So, it seems that big investors are massively locking in profits. In addition, inflation fears are also weighing on the market. Today, the US Core Consumer Price Index was published. The reading was better than the forecast. The US dollar index is likely to advance amid the positive results of the report. However, this data is unlikely to somehow affect the upcoming correction, which analysts have talked about so much. Let's start with the S&P 500 index. All major US stock indexes fell sharply on Tuesday, primarily by the end of trading. The Dow declined by 1.4% and the S&P 500 index lost slightly less, only 0.9%. Today, the S&P index reached 4,150, a much lower level in comparison with the recent highs. Unfortunately, we see correction coming. In the short term, the trading range is expected to be within 4,180 and 4,050 points, with the prospects of a further decrease. At the same time, the US dollar index strengthened slightly. It's still weak, although it's slowly but surely gaining momentum. Today it was trading at 90.45. Analysts believe that the US dollar will stay in the range between 90.20 and 90.60, with the prospects of a short-term growth amid positive data on the US Core Consumer Price Index. The US dollar slid considerably against the Canadian dollar. Moreover, the loonie has every chance to continue its rally amid a drop in the US market and high oil prices. Today, the US dollar-Canadian dollar pair was moving around 1.21. From a technical point of view, and given fundamental factors, the quotes are likely to trade in a rather narrow range between the levels of 1.2050 and 1.2150 in the near term. The price of the main cryptocurrency again failed to break above $60,000 and tumbled. In order to resume its bullish run, the asset needs to overcome certain price levels. Bitcoin is currently trading at the level of 56,500. The technical analysis suggested that the price of BTC may decline again in the near future. The current recovery in quartz indicates the lack of support for the cryptocurrency. This may lead to a drop to the area of $51,000 and $52,000. After that, a new wave of gains is expected to begin. The events of recent days included extremely weak data on employment in the United States for April, as well as ambiguous values of production indicators. As a result, investors shifted their attention to statistics on consumer inflation, which turned out to be above expectations today. As for the US dollar outlook, the currency will hardly make any significant upward or downward movement in the near future. The greenback is still trading under pressure from the US Treasury and the Fed's large-scale measures to support the economy. However, the fact that US Treasury yields consolidated around the recently achieved local highs, as well as the demand for bonds as a safe haven asset act as support for the US currency. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.